To casual effects. Now we're going to look at technical analysis. Technical analysis. I'm focusing on trend lines today. So I told you that technical analysis has to do with trading with news. Technical analysis involves trading with news. So I'm going to focus on trend lines. Trend lines. Now when you're trading, you need to understand that the chart flows with the trend of the country, trend of the economy. Now this is very important when it comes to trading. If you understand the trend lines. Now when it comes to trend line, you need to break it. You can break it into two parts: trend and line. So trend has to do with the occurrence that keeps or reoccurring, the latest trend, latest what is popular, what is working, that keeps occurring. So when it comes to line, you have to, that one has to do with drawing a slant line towards the trend. Now combination of the two has to do with drawing of lines of a particular trend, particular occurrence, that is the latest occurrence, latest update. Now let's see what's a trend line. Trend lines are fundamental tools in technical analysis, helping traders identify and analyze trends in financial markets. Now you need to understand that it helps traders to identify and analyze what trend in a particular financial market. Now you need to understand that when it comes to trend line, you have to connect the higher or lows. The high or lows. The trend line is a straight line that connects either the high or low in a price chart. And when it comes to high or low, just understand it from the angle of high and low. So when it comes to the high part, it has to do with a downtrend. When it comes to the low part, coming low upward, it's an upward trend. So that is the explanation. So when it comes to high, it's just coming up, down. Then when it comes to low, going down, up. That is a upward trend. Then you need to understand the visual representation of trend. It provides visual representation of a prevailing trend, the current occurrence, the latest occurrence in the market. Now looking at types of trend lines. Now when it comes to this, you need to pay close attention, because this is what I expect traders to do when they are trading. After you have looked at the market, after you have looked at the charts, after you understand whether it's upward or downward trend, you can now draw the trend line. So when it comes to trend line and when it comes to charts, you draw trend line starting from the major trend line. Many people may not tell you that, but you have to draw from the major trend line before you come to the minor trend line. I'll get to that. Now let's look at types of trend lines. You have the uptrend line. That one connects higher lows, and suggests an upward price trend. Now you need to understand that this uptrend line is just simple, connecting the higher lows. We have the higher highs, we have the higher lows. So people make mistake of connecting the higher high and think that it's an upward trend. So when it comes to uptrend line, you need to connect higher lows. Then the downward trend, you connect the lower high. Then the sideways trendless line connects highs and lows in a more horizontal manner, signifying lack of clear trend. The third one, people don't make use of it. You understand? The third one is not advisable because you tend to lose more money. The third one occur when it comes to consolidation, when the market is still consolidating. Like, it's not advisable to trade that when the market consolidates. When people trade it, no, trade major and minor what, either upward trend or downward trend. Don't trade sideways. When a trade is sideways, don't trade it. Don't trade it because the market is still consolidating. What do I mean? Now, for example, now the market is still. What I mean by consolidation has to do with that the market is, there's no major occurrence in that market whereby the market is going high, coming low, going high, coming low at the same rate or slight difference. So you don't advise to trade that kind of market when it comes to sideways trend lines. So it's important that trend line should be the number one focus. Understand the trend. Anybody that is trading to understand the trend. So we have uptrend line, downtrend line, and sideways, which is not, this last one should not be focused on. So focus on mainly the two. Now let's see uptrend line. Uptrend line has to do with what? Higher lows. I've talked about that, higher lows. Indicate what? Bullish market sentiment. So it indicates what? Bullish market sentiment. That means that what? There are more buyers dominating the market. There are more buyers dominating the market. That means the bullish. Now when it comes to bullish, comes from the connecting of bullish trend line connecting what? Higher lows, not higher high. When people put higher high, I think that is the uptrend line. It's higher lows. Now let's look at it. Now you can see that this is an uptrend. Can you see? This connection of higher lows, higher lows, higher lows, higher lows. Now when you see that the market went to higher high, then came back to higher low. That is what occurred here. You can see that this is a trend line. Can you see? Now if you when it comes to drawing of trend line, you have to start from major time frame. Start from what? The big time frame. That is what I started here from 4-hour time frame. Now you can see that I draw the trend line. Now trend line can either touch the I'm talking about candlestick, touch the tip of what? The trend line. Now some trend lines, sometimes you may touch the body of the candlestick. I've explained candlestick patterns for you. So when it comes to trend line, you need to understand it from the candlestick pattern, that you don't take a trade unnecessarily without understanding the trend line. So when it comes to trend line, you apply trend line and candlestick pattern together. In this place, I make use of psychological levels, which I will discuss later on. But this trend line, just look at how it is. Just draw it. When you just see it, you can just understand it. This market now, I can see it from this 16th of October. Now, if you look at it now, for an example, now I can tell you that this market is an upward trend. Don't waste it. And that is that what? There are more buyers in the market. That means that the market is what? Is going higher. That means that what? The market is still in a good way. Market is still in a good way. Now, when it comes to this, now I told you that you are trading GDP against USD. Trading one currency against another currency. So when it comes to this market now, you can see that you are buying what? GDP, and you are selling what? USD. So if now in this place now, like this trend I drew like this, I can tell you that the GBP is what? The economy is good. Why the USD? The economy is not so strong. That's why there was upward trend.